Broadcom just released their latest earnings, and if you are only looking at their chart, which is currently down significantly from its high, it looks like the party is over. But if you look at their earnings, they actually beat on both revenue and guidance, and the fundamentals are getting stronger. In fact, they might have just handed us the roadmap for the next phase of the AI supercycle, and the pre-market prices right now are reflecting the sentiments. So in today's video, we are going to do a full breakdown of their earnings and assess their fundamentals, valuations, and technical strength, whether this might be a buying opportunity now. Now, a quick breakdown about their business. They are a global semiconductor and infrastructure company that builds critical components for the AI build-out that we are seeing right now. So the products includes many things that are being used. It can be chips in data center networking, broadband, wireless devices, so on and so forth. And it's all to help company manage their cloud and IT infrastructure. So in short, they provide most of the underlying hardware and software that allows large-scale digital system that we see in big enterprises and networks to operate. Now, in the AIs particularly, they are positioned as a key infrastructure supplier, and they actually design custom AI chips for hyperscaler companies and produce high-speed networking chips that connects thousands of processors inside this kind of AI data center. And as AI workload scales, demand for these custom chips will also scale. So it makes them a very important enabler of AI computing as we move forward. Now, looking at their revenue, right? Let's start with it. And if there was any doubt that the AI capex expenditure cycle was slowing down, I think Broadcom just actually crushed it, right? They actually beat both on earnings and guidance and doubled their AI revenue in their latest earnings, right? And what we saw was that the guidance for the Q2 accelerated notably versus the Q1 previously, right? With revenue and AI semiconductor growth rates both increasing. And we look at the revenue, right? Revenue of 19.3 billion, beating the consensus of 19.2 billion. So it's actually 29% year on year. And if you look at their earnings was a wonderful beat as well. But more important than their earnings is actually their AI revenue, which is what the market cares. And they actually put in $8.4 billion from AI solutions alone. And that is up 106% year on year. Q2 guidance revenue, massive acceleration, and you can see their free cash flow generation and the margin is very, very strong, right? And from this AI revenue acceleration, right, this is confirmation that what the market likes, right? It tells the market that the hyperscalers such as Google, Meta, Microsoft, they are not tapping the brakes. In fact, as AI capex increase, this will only benefit Broadcom. And the hyperscalers that we just shared, right, they're actually buying custom chips as fast as Broadcom can make it. And this is why we can see that based on their latest earnings, it validates the AI supercycle thesis. Now, interestingly, when they released their earnings result earlier, there was a very brief sell the news reaction. But right away after that, the stock rallied. And right now, pre-market, we are sitting at roughly about 7% because you can't beat that kind of guidance that we see in the market today. And they are effectively telling us that this AI infrastructure phase is still in the early to middle innings and is not the end. Now, and something interesting, this is actually from the earnings call. You can see I highlighted this, right? And this is something that Broadcom talked about their hyperscaler customers. So initially they had 5 customers, but which they saw strong shipment by, but they also just said that they have a 6th customer. Right? What is this 6th customer referring to? What are they doing? They are basically designing their own AI chips with Broadcom instead of buying GPUs from NVIDIA directly. Broadcom basically helps to turn those designs into real chips and networking hardware. Now, who are these 6 customers likely are? And Broadcoms usually don't confirm this name, but the names that we spoke about earlier, like Google, Meta, Microsoft, those are ones. And there's only a handful of hyperscalers that you can think about, like Amazon is another one, OpenAI is another one, and these are already 5. Now the last one is possibly another large AI cloud company. It might not be US, right? Because it can be Chinese companies as well, like ByteDance or Alibaba or anything. Now, so you can see, right, how more customers, more hyperscalers are actually adopting their solutions and adopting their services. Now, how are we going to analyze their business? Okay, so To do a deep analysis, right, to fully understand their business as a whole based on their latest earnings, there are a few metrics that we look at. Number one, we look at the business overview, right? We understand what a company does and how it actually makes money, which we know from the intro earlier. Second is we look at the industry, whether the industry is it facing a tailwind or a headwind, and will it actually help or hurt their growth. The third is the competitive mode, or what we say competitive advantage, which will evaluate how defensible the company is against competitors over time. We look at the business model again to see how scalable and how predictable it is, and of course profitability, because right now in today's market, profitability is very important. So we want to see how efficient the company converts revenue into profits. We also look at execution and management to see whether the leadership can consistently deliver on strategy and growth, as well as resilience, which is specifically the debt to EBITDA ratio. And this basically indicates how well the company can survive downturns and manage their debt. Catalysts and risks to identify events that could significantly move the business or stock. And after that, we will look at the price action, which is their technicals, to see market sentiments and momentum. And last but not least, the valuation for us to determine whether the stock is cheap, fair, or expensive relative to its fundamental. So let's get started. The first one, business overview, right? You can see the rating upon 10 is a vertically integrated fabless semiconductor giant, very clear. And their VMware infrastructure, the acquisition, right? They have really integrated very nicely. So it is a good sign of their business, right? They are able to include it and get customers to buy them. Now, when you look at the industry backdrop, this is also very clear, right? They are right smack in the middle of the semiconductor cycle, and we have hyper growth in AI-centric data center versus some cyclical stagnation in broadband. But the shift towards custom chips, right, is cannibalizing what Broadcom's main design model is. But this is also offsetted from the hyperscale growth they are getting from the hyperscalers, these kind of custom chips. So you can see the rating is also very strong. Next, the competitive mode, right, in terms of their high-speed connectivity and their deep integration with Google and Meta. And also consider, right, for companies that have adopted their solutions and integrated them into their company and their data centers, right, it's going to be very difficult to replace. So there is a very strong 9 out of 10. And when we look at their business model, the way their strategy is, you know, they acquire the leaders like VMware that we saw, and they shift towards very high value subscription model. And this is why we see their free cash flow margins being at 41%, super strong, as well as predictable capital returns profile. Now, moving on, let's looking at their profitability, right? You know, very strong operating profits, adjusted EBITDA is growing very strong, which shows that they have very good pricing power and they are very disciplined on their costs. And free cash flow generation, again, this is the key metric, right? 8 billion in their most recent quarter. This is amazing. 41% free cash flow shows that they have a huge and very long runway ahead. Now, when we look at the management, right, the CEO, right, the CEO actually highlighted 100 billion AI revenue by 2027, as well as confirmed the Meta's project alive and well. So you can see in Q4 2025, he focused on a very good transition, and he also emphasized the acceleration of AI network to 40%. And for the current CEO, right, Hock Yi-Tan, right, he has been around Broadcom since 2006, so close to 20 years already. And you can see how he actually scaled them from being a small player to one of the dominant players in the space right now. They do also have some strong shares buyback, and recently issued new notes to higher cost VMware debt, and this actually helps to optimize the capital structure, especially when they are merging. And moving on to the resilience, right? So the net debt to EBITDA is also very strong, 1.4 to 1.6. So even though their debt is very high, they do have very strong interest coverage ratio, number one, as well as very strong liquidity, right? Add on to them generating a very high free cash flow as well, right? And that shows a very strong resilience. But of course, with them having the debt is high, that's why we give them a slightly lower rating of 7 out of 10. Now, of course, for a business, we want to see their growth catalyst as well as the risk involved, right? And you can see the catalyst, right, with the hyperscalers, 5 customers, adding another 6 customers, as well as Anthropic now demand projected to exceed 3 gigawatts and many more. In fact, with agentic AI, like what NVIDIA CEO Jensen Huang has said, it is only going to scale higher and higher. And as more people uses faster speed cables, faster speed software and hardware, this is where Broadcom will stand to benefit. Now, when we look at the risk, this is where they face one, which is heavy customer concentration. If most of your revenue is concentrated between 5 to 6 hyperscalers, What happens if one of them, for some reason, they decide to stop using Broadcom? This will have a huge impact on the revenue as well. Now, apart from that, they do also have a segment which we saw there, which is their legacy business model, right? The non-AI semiconductor revenue, it is flat. But in a way, it is expected, right? Because to them, to that business model is actually cyclical. More important as to what the market wants to see right now is their AI revenue, which so far they are seeing right now, but it's something to monitor. Last one is rising inventory level, right? Basically, it shows that they are holding a lot of inventory. So this is also a little bit of risk, right? Because if it holds a lot of inventory, it is a cost to them. And last one is just normal regulatory scrutiny, which is in a way is also part of the risk too, right? So based on this catalyst as risk, you can see that there's quite a little bit of risk over here. With a very decent point of growth catalyst and inflection point, but for this we give it a more conservative 6. Now when we look at their technicals level, which is their price action, so you can see that right now this is the latest price that I pulled out. The pre-market is trading up 7% right now, and if you are looking at the charts, you can see that Broadcom, after reaching its all-time high of over $410, it has done a very strong pullback until actually going as a low of close below $300, close to $295. But right now you can see it is actually holding a very strong support around the 310 to 315 region over here, this range, and it is also sitting at the 200 daily EMA line right here. Now, something to point out, right? You can see that at this area, this was a gap that Broadcom had, which got filled back in early February, right? So this kind of gap is a TA pattern to where it says that a company, once the price has run up, it will have to fill the gap. And we can see that Broadcom has successfully filled the gap. And you can see based on latest price action, it is actually a very strong confirmation. Now, when we are looking at how the price has moved, the pre-market prices right now, you can see that the market is actually taking this very positively, where the price was actually below the 50 and 100 EMA, right, the daily EMA. But now, based on pre-market prices, it is above. So for us to see a sustained momentum, in today's closing, we do want to see the price closing above the 334 line, $334, for us to ensure that it is a much more sustainable rally upwards over here. Now that we have seen the price action, let's look at the valuations, right? And you can see right now, based on the price to free cash flow, it is at 57, P is at 65, price sales is about 23, and PG ratio is 1.82. So you can see that the price to FCF multiple has actually expanded from their median. In fact, it is actually considered slightly on the high side, and you can see that the reason why this is happening is because of this AI premium that the business must outgrow. And what we see is that based on the current valuations, this implies that we do have to see AI infrastructure spending, and we don't want to see it sustain down the road, because if there is any signs from any of the hyperscaler coming in and say that they are going to spend lesser on AI capex, this is where it might affect the valuations and the multiples that we see in Broadcom. And moving ahead, what are we looking out for in the next earnings, right? I think first one, very important, is their AI revenue. We want to see whether they can actually hit this $10.7 billion target, this guidance that they have set for the second quarter. And more than that, I believe when the time comes, the street will definitely be expecting them to not only meet this target, but to actually beat this target, right? And this is something that we will have to monitor when the next earnings come out. But we will have some idea along the way, because especially if there's new partnerships coming out, this will be beneficial to them as well. Next is these custom silicon clients, right? They said there are 6 customers. We don't know who will be the next one, right? The next major customer and beyond Google and Meta. So this is something that we have to monitor to see whether they are going to get more new hyperscalers, more customers coming in. If let's say the next quarter they say that, oh, they're going to have another 7 customer, 8 customer, this will be a very strong signal for the business. And lastly is of course VMware, the progress on integrating it to maintain that EBITDA margin that we are seeing over here. Now, what is my personal opinion? What is my overall take? Now, personally, we've seen Broadcom corrected from its all-time high. It is a healthy correction. Don't get me wrong. When we see this correction happening, it is actually good for the market, right? Think of it as you're running a sprint, right? You will have to slow down first in order for you to run faster down the road. And this pullback that we see is actually good for Broadcom in the long run. In fact, if it continues to run up higher, it is where it is more dangerous. And we can see how fundamentally strong the business is despite them going through this kind of price action. So price action is not the only thing that we look at when we understand companies. And their latest 6 customer is proof that they are just one of the best in the space. Otherwise, they will not be able to get this kind of deals. Now, valuation is of course a bit on the expensive side, but it's because they are positioned as one of the big winners in this AI build-out. Okay, and unfortunately, not only for them, many other AI companies are demanding this kind of massive premium. So for you as an investor, it is something for you to understand whether does the fundamentals really outweigh the valuations that allows you to have a position in Broadcom or to build up your position. Okay, and also remember, right, they are supplying to the hyperscalers, and this is in a way a double-edged sword, because if hyperscaler capex increases, it benefits Broadcom. But at the same time, if hyperscaler capex decreases, that might affect Broadcom as well. Now, that's all that we have for today's video, specifically Broadcom's earnings. If you enjoy such content, be sure to hit that like and subscribe button. It will really help me to create more of such content for you. So thank you, and I'll see you in the next one.